How does the take rate compare on Instacart versus some of those other competitors that you were just mentioning, Bernie?
Yeah, well, so Instacart has it matters what the AOV is or what the average order value is. One of the interesting things that we did in our analysis was looking at kind of four quadrants: one, subscribers and non-subscribers on one axis, and then a $35 order and a $150 order. And what we saw is that Instacart's actually not the cheapest in any of those categories. And so over time, we think price certainly matters. We did a consumer survey asking consumers what drives them to use their favorite delivery order, and certainly price matters. And so I think that's going to be important over time. And so we think that that's why Uber and DoorDash are in a better position competitively.
Bernie, beyond price, that's interesting there, just in terms of what determines app use. What else did you find from that survey?
Yeah, I would say going back to the TAM discussion, so three major reasons why consumers don't do online grocery, and two of them we think are structural. So one is just if it's too expensive, but then two, quality concerns issues. So making sure that you're getting the right protein or you're getting, the right avocado, if it's, ripe or not ripe. And then three is people actually like going to the grocery store. And we think those last two reasons are certainly structural. And so while we think about, where that 12% of online grocery sales could go, we think that there's structural impediments for why, it won't get to online restaurant order levels of digital penetration.
And so in that penetration, as our viewers are taking a look at it right now, or at least they were on the screen a moment ago, when you think about how in that total addressable market you need to see other expansion internationally, what regions are they already having a leg up against some of those other services, either locally or the ones that are also international players?
Well, Instacart's solely focused on the U.S. right now. I think that there is a larger there could be an international opportunity for them over time. But no, they're solely focused on the U.S. market right now. I mean, the other market that we're talking about just online grocery right now, but what comes with that is really the advertising opportunity. And that's one area of the business where we have been bullish in them as a retail media network. So that's them why it's so attractive for advertisers, especially CPG advertisers who are spending over $200 billion per year on advertising, is that advertisement happens the same place where the purchase happens. So think about that attribution that you're able to get as an advertiser. The only difficulty for Instacart, and as they've grown this business to almost $1 billion, I think they can get to 4 to 5% investment rate over time. The difficulty is that you are competing with grocers with that online to offline channel, and grocers, right now their gross margins are right now about 20-25%. Their EBIT margins are mid-single digits, and one of the reasons why they're even that high is because of advertising dollars. So we think there's a potential for that relationship between Instacart and grocers to be strained over time, as Instacart's increasingly competing for those same advertising dollars.